Prime Minister Scott Morrison apologises in Parliament as Canberra cranks up in the run into the federal election. Also, Macquarie Group outlines a booming result and why there's a crisis in the coffee industry. It's Wednesday, the 9th of February 2022. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Michael Thompson and good morning, Sean Aylmer.
Good morning, Michael. You well?
I am well. I'm worried about a crisis in the coffee industry. I'm quite a coffee fan.
Yep, that one's for you.
Okay, I will stay tuned, obviously, for that one. And of course, stay listening for Sean's chat to Andrew Spark from Copper and Gold Explorer Q Mine. Something a little bit different today. Quite an interesting chat, that one. But first, Sean, Prime Minister Scott Morrison yesterday formally apologised to political staffers and others who have suffered bullying, harassment and assault in Parliament House, electorate offices and ministerial offices.
Yes, Mr Morrison said exploitation, abuse and harassment had played out as traumatic and harrowing experiences for many individuals. He said harassment of staff, particularly female staff, senators and members, had been perpetuated whereby bullying, abuse, harassment and in some cases violence became normalised. Labor leader Anthony Albanese joined the Prime Minister and said no one deserves to feel unsafe or disrespected in National Parliament. Nationals leader Barnaby Joyce also offered an apology. Brittany Higgins, a former coalition staffer who was allegedly raped in a minister's office, was in the public gallery yesterday to hear the apologies and was clearly distressed. The apologies weren't universally welcomed. Australian of the Year and a victim of abuse, Grace Tame, tweeted that the apology was a performative, last-minute Band-Aid electioneering stunt, while Green Senator Sarah Hanson-Young was upset about the lack of notice that the apology was even going to happen. It was really quite an emotional start to the sitting parliamentary year.
Yeah, it certainly was. And the Prime Minister also paid tribute to Queen Elizabeth as well.
Yes, he did. To mark her Platinum Jubilee, or 70 years on the throne, we mentioned this one on Monday. February 6 was the exact date of her ascension to the job after her father, King George VI, died. Mr Morrison said the Queen had been the reigning sovereign of 15 Australian Prime Ministers, 16 Governor-Generals, 14 British PMs, and about 170 Commonwealth Prime Ministers. Not bad.
That is pretty extraordinary, isn't it? Some amazing stats there.
Sure is. And she deserved that bottle of gin that the people of New South Wales sent her to congratulate her.
Oh, gosh, yes. Now, Sean, it was the first day of Parliament for the year and one of only 10 before an election. How did it go?
Well, question time was focused on the crisis in aged care, with Labor using the dreadful fact that more than 600 older Australians have died in residential care this year. Otherwise, debate continued around the Religious Discrimination Bill and amended Sex Discrimination Act, which is causing problems for the government, mostly because there's limited agreement on many aspects of the legislation. One of the key points of contention is that the proposed legislation will allow single-sex schools to discriminate against transgender students. Not really what the government needs right now.
No, certainly not. All right, looking at markets, Sean, how did the local bourse perform yesterday?
Well, the S&P ASX 200 closed up more than 1% to 7,187 points, thanks to a big jump in the iron ore miners. Futures prices for iron ore topped $150 a tonne, sending BHP up 3.6%, Fortescue 3.2% higher, and Rio Tinto was up 2.8%. ANZ and Westpac were both up 1.4%, while CSL rose more than 1%. Aristocrat Leisure and James Hardie both rose more than 2%, but the laggards were the retailers, with Wesfarmers, Woolworths and Coles all going backwards. Now, remember we talked about Magellan Financial yesterday morning. It was hammered after Hamish Douglass, the founder and CEO, stepped down for medical reasons. Well, its share price surged 7% yesterday, while the travel stocks continued to improve on the back of the announcement that international borders will reopen from 21 January. And Michael, I know you love a good Bond story. Today's your day.
Oh, hang on. A good Bond story? I don't think that exists. And I can actually hear eyes glazing over. So I think you have a time limit for this one. You can have 20 seconds on bonds today.
Okay. Well, 10-year government bond yields jumped to 2.13% yesterday. That's their highest level in almost 2 years. It matters, Michael, because most of us and our superannuation funds invest in bonds. If we invested tomorrow, we're going to get more than that than if we invested in bonds yesterday. So it does matter. Also, higher bond yields can cause sell-offs in other sectors of the share market. tech stocks are a great example, so how they're valued really matters to shares. Hence, a jump in yields matters to you, Michael, in your superannuation fund.
Right, you know what, Sean? That was 20 seconds well spent because as far as bond stories can be good, that was a good one.
I'm going to take that as a compliment, Michael.
And so you should. Now, what about overseas markets?
Well, US markets were generally higher. The most interesting news out of Wall Street, though, was the slump in the share prices of vaccine makers after Pfizer issued guidance that disappointed analysts. European markets rose following comments from the European Central Bank President Christine Lagarde that tempered expectations of interest rate rises in the region anytime soon. She said while inflation remained elevated, it was likely to decline in the course of the year. And, Michael, one of the biggest deals of the year looks to have fallen through. Japanese giant SoftBank's $66 billion sale of UK-based chip business ARM to Nvidia, which is listed on Wall Street, has collapsed after regulators in the US and Europe raised concerns about what the deal meant for the global semiconductor chip industry. It was set to be one of the biggest deals of the year.
Okay, we'll be back in a moment with the rest of the day's business news. Plenty of stories around this morning, Sean. The National Australia Bank Business Survey shows that business conditions deteriorated last month as the Omicron variant of COVID-19 hit the economy hard. No big surprise there.
No, not really, but this survey is closely watched because it gives near real-time information about what's going on in the business world, and it doesn't look great. Profitability, trading conditions and employment readings all fell across most states and industries. Recreational and personal services was hardest hit, but retail, transport and construction were all affected. That's what happened in January. The good news is that business confidence about the future actually picked up. It took a massive hit in December as the Omicron variant moves through the economy. But businesses now seem to be much less worried, confident that the outbreak will be short-lived. The survey shows price pressure in the economy with wages bills growing. Overall, I think the survey says that even though the Omicron variant has hurt business, companies are able to look well beyond it, and that's really good news for economic growth.
Now, Macquarie Group's share price jumped yesterday after the group said earnings were looking good.
Yes, it said it's achieved record quarterly earnings for the 3 months to December as financial markets picked up. But its boss, Shamara Wickramanayake, was cautious about the outlook, which is very typical of her. The bank didn't actually provide any numbers, but given it made a net profit of $2 billion for the half year to last September, its full year result is likely to be well over $4 billion. Its market-facing businesses, those dealing with commodities, mergers, acquisitions, that type of stuff, and its local banking franchise were the standout performers. Michael, Macquarie is now Australia's sixth largest company, worth around $78 billion. Its share price is up by about 1/3 since immediately before the pandemic, including a 4% rise yesterday. Now, that rise yesterday pushed it above ANZ on the list of largest companies. Its share price performance compares to very slight rises, or in fact falls, for the four major banks. In that financial services sector, easily the best performing during the pandemic. It's been an incredible success story for many years.
Yeah, it's a terrific one to watch. And another financial services company outlining profit results was Suncorp, Sean.
Yes, I like to look at Suncorp's results because it's a mix of banking and insurance, and it owns a bunch of brands we all know about, GIO, AMI. It's a pretty good barometer of how the economy is going, particularly in Queensland where it's based. Having said all that, it was a really tough half year because of wild weather. The group said cash profit fell 29% for the 6 months to December, and it cut its dividend to its lowest level in almost a decade. But the result was actually better than forecast, and the group's share price jumped sharply. 19 disasters hit the group during the 6 months, the costliest being a hailstorm in Adelaide. The company's been able to push through higher insurance premiums, not something many of us want to hear, though it is good for shareholders. Also, bad debts from the banking division were lower, notwithstanding COVID-19. All in all, not bad.
Now, this is an interesting one, and I'll be keen to hear you take me through it because it's a twist in the push by miners and energy companies to become greener. So Santos has booked carbon storage capacity, which presumably it hopes will be valued by shareholders.
Yes, the company booked 100 million tonnes of CO2 storage resource in the Cooper Basin in South Australia as part of its annual oil and gas reserve statement released yesterday. According to the Financial Review, the Society of Petroleum Engineers, which is an international organisation of oil and gas experts, has developed a system to book carbon storage capacity. That capacity can be used, so the argument goes, to store greenhouse gases removed from the atmosphere via carbon capture technologies, which are being promoted around the globe.
Right, so presumably then there's a value ascribed to the storage resource.
Yes, exactly, though it's not quite clear what that is. Santos should be able to sell Australian carbon credit units generated from the project into the federal government's emissions reduction fund. That's how it will generate income. So the Cooper Basin storage resource will have a value. I'm not quite sure what that is, and I just think it's a really interesting take on the carbon debate and how oil and gas companies are trying to create value from things that we actually thought were a negative.
Okay, Sean, what's making headlines in today's news media?
The Financial Review is reporting that vaccine protection and mask wearing are expected to keep fatalities from the Delta and Omicron waves of COVID-19 at around the same levels of the 2017 influenza outbreak, which was one of the worst flu seasons. Deaths across the two variants are projected to be about 4,000 by June this year, according to research group Health Metrics and Evaluation. And finally, Bloomberg is reporting that the US has seized about $3.6 billion in Bitcoin, stolen during a 2016 hack of the Bitfinex currency exchange, and arrested two people. When the couple hacked the exchange, Michael, the value of the heist was $71 million, but the cryptocurrency has appreciated so much, it's now worth $3.6 billion.
All right, running through some of the other stories around today. In COVID news, New South Wales reported 9,700 cases and 18 deaths yesterday. Victoria reported 9,800 cases and 20 deaths. There were 5,200 cases in Queensland with 19 deaths and nearly 2,400 cases recorded in other states and territories. Meanwhile, anti-vaccination protesters gathered outside Parliament House, hoping to put pressure on politicians as Parliament resumed, but I don't know how much attention they got.
I don't think they got much. The New South Wales coalition government spent 96% of a $252 million council grants program funding round in coalition-held seats ahead of the 2019 state election. 96% went to coalition seats. This is a program that former Premier Gladys Berejiklian said was a pork barrelling exercise. She pointed out that it wasn't illegal. The state's Auditor General said there was no guidelines on how the money was to be spent, i.e. it wasn't illegal, but Ms Berejiklian's successor Dominic Perrottet has certainly vowed to crack down on pork barrelling. 96% in coalition seats. I think that's outrageous.
That is pretty extraordinary, isn't it? That is ridiculously high.
It is. And just staying in New South Wales, Mr Perrottet has also called for the cruise industry to resume soon, as long as it's safe to do so.
Now, energy giant Shell will develop 145 new gas wells in Queensland's Western Downs region for local use and for export. It's part of a deal to supply gas until 2033. Shell currently supplies 60% of the state's domestic gas.
And finally, Michael, former Prime Minister Malcolm Turnbull yesterday criticised blue hydrogen, something that the federal government talks a bit about. Now, blue hydrogen is hydrogen derived using gas as an energy source. Mr Turnbull said there's no place for hydrogen sourced from a polluting fossil fuel. The option is green hydrogen, which uses renewable energy to create the hydrogen.
Okay. Now, what's the key overseas news this morning, Sean?
French officials said Vladimir Putin had moved towards de-escalating the Ukraine crisis by promising not to undertake any new military initiatives and agreeing to withdraw thousands of Russian troops from Belarus after the completion of planned exercises. It came after Mr Putin met with French President Emmanuel Macron, according to the Financial Times. Dialogue between the two is expected to continue. Such a deal would certainly ease tensions within the region and financial markets. Amazon is about to start paying its people more money as it struggles to find and keep staff. The global giant is more than doubling the maximum base salary it pays employees from $160,000 US to 350,000 US dollars. That's according to Bloomberg. Most jobs globally will receive a pay rise, and it plans to make awarding of stock options more attractive. According to media reports, Amazon has suffered substantial staff turnover last year. This should help out. And Michael, finally, the one you've been waiting for, there's a crisis looming in the coffee world.
I am waiting with bated breath and I am slightly concerned. Go on.
Reserves of high-end Arabica beans have fallen to their lowest level since 2000, which is actually when monitoring began, so it may actually be longer than that. According to Bloomberg, there's about 65 million kilos in storage. That actually isn't much globally. Coffee reserves have been falling since September due to much higher shipping costs and poor weather conditions that has harmed production in Brazil, which of course is the world's biggest grower and exporter. Coffee prices are around 10-year highs and they're unlikely to fall anytime soon. Now, I know you're worried about it, but it is particularly bad news for Finland, Norway, Iceland and Denmark residents because they're the top coffee drinking countries in the world. In fact, Australia ranks only about 40th.
I apologise to any listeners in Finland, Norway, Iceland and Denmark, but I'm worried about Australians. We might be ranked 40th, but I can actually just picture the Fear and Greed listeners gripping the steering wheel right now in fear that the coffee shortage is going to hit us hard. So thank you, Sean, for finishing us on such a bad news story today.
I'm sorry about that, Michael, but I'm sure your local cafe still has something for you.
I hope so, and if not, I'm on my way to your house. Up next, Sean, is the Fear and Greed Daily interview with Andrew Spark. He's the Executive Chairman of Q Mines.
Yeah, we talked about Q Mines, but really more about the gold and copper sector, and particularly how mines are going green. Q Mines wants to be carbon neutral. And mining is a really dirty industry. What I really loved about this chat is how the industry itself is trying to change to meet investor demands.
Yeah, I also like the fact that he talks about how much of it is driven by data and the decisions are made really using the numbers. You just have this image of someone out there kind of with a pick and a shovel making all these the decisions about the mines, but it's not how it's done.
We've moved on.
Yeah.
We have moved on, Michael. Data is really important. Geological surveys, all those sorts of things.
Yeah, it's a really good chat, that one. That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Wednesday, the 9th of February, 2022. Make sure you're following the podcast and please join us online on LinkedIn, Twitter and Facebook. I'm Michael Thompson and that was Fear and Greed. Have a great day.